level. So each one of those will have a rule and say, okay, when I get in here, I'm going to risk X dollars. And then my stop goes above that high. And so very specific, very methodical. And every day when I see these setups, I will take a screenshot, send it to my Evernote, and that way it stays fresh in my mind. And my confidence grows whenever I do that, right? If I've seen a setup 1,000 times, and I know what the win rate's going to be, I know what to expect, I know what it's going to look like when it's about to fail, and I know where I need to really size in and then take advantage of a good opportunity.
Now, something like that, are you taking this trade every time you see a setup which fits that criteria, or are you kind of selective about which ones you actually execute on?
So if it meets my criteria and it's setting up as that particular setup, I have to take it. If I don't take it, then I'm just adding a lot more variation to the results, and that's just going to cause frustration. So I'm going to try to take that setup every time I see it. Now, do I do it every time? There are times where you're a little bit more gun shy, maybe because you're not running as well, or you might jump the gun where that setup hasn't really fully presented itself yet, and it's and you go in a little bit earlier. But if I see it, I'm going to take it, and then at the end of the day, I'm going to measure how I did. Did I go in too early, or did I completely miss the trade, and why did I miss it?
This episode of Chat with Traders is supported by Health IQ, a life insurance agency doing their part to improve the health of the world. Health IQ celebrate the health conscious through social and financial rewards. Using science and data, Health IQ secure lower rates on life insurance for those who make the market. But how much of your P&L, or how much does rebate contribute to your P&L? Like, is that a big part of your strategy?
No, not anymore. I think it's there and it's useful to have access to that, but it's not the driver these days. These days, the HFTs who are co-located and have fast connections and best hardware and the special order types, those guys are going to be there much earlier than me. So just trading for rebates, that game I think, is done unless you're, one of the best HFT guys out there. Now, it doesn't mean that I don't trade for rebates. I don't try to be efficient and maximize what I could get, but we don't specifically trade for rebates. That's not a big part of what we do.
Okay. What sort of stocks are you trading? I know you spoke about this a little bit before, and that setup you gave. You spoke about trash names, which I'm sure are mostly the lower cap stocks. But where is most of your volume done? Is it done on these big blue chip names where you can really get a lot of size on, or is it done mostly in low floats?
I'd say it's probably a third in these low price stocks that you could do a lot of volume, blue chip names, you could do a lot of volume, and then the other third would be these low cap stocks.
And how many names would you be in and out of on any given day? Like, how many stocks are you watching?
I'd probably trade about 8, 10 names on any given day. And some of those might be, something I'm swinging for a few days or a couple of weeks, or and I'm trading around a core position, while others I'm just, something with fresh news that, short-term trading, and I'm in it in and out, and probably putting on 5, 10 trades in that symbol.
So how are you deciding if a trade is going to be just a short-term intraday trade or something that you might swing for a couple days?
Most of the time when I put the trade on, I already know if this is something I want to swing. It's set up as a swing trade in a different time frame. For example, in a 15-minute chart, on a 1-minute chart, on a 1-hour chart rather, I already know that this is something that if it keeps on acting like it should, I'll take it home, and I'd want to keep it for, a few days, a couple of weeks, if it keeps acting right.
So what might be a reason for you to swing? Like you say, if it looks like you usually know when you put a trade on how long you're going to hold that stock for, presuming it keeps acting how you anticipate it to act. What would what's the word? What would give you reason to think that this is a good trade to swing for a few days?
It's simple, right? In this business, it's mostly about green or red, and if I put on a swing position and it's working, the earlier it works, the better. And by the end of the day, if it's green and it's working, then I'm going to keep that one and allow my exit rules to take over. In this business, it's a lot of black. It's a lot of black and white. It's very easy to know when you're wrong, and it's very easy to know when you're right. It's not like when you open a retail store, you might need 6 months to figure out if the business model is working. Instantly that the trade that you put on, if it's right or wrong, and the best trades will start working right away.
Mm. And these 8 to 10 names that you're trading, on average most days, how are you finding these 8 to 10 names? Like out of all the stocks you can pick from in the US market, how do you decide that these are a good 8 names to be trading for this day?
Yeah, so when we get in early, we'll start doing research. First, we'll see on the macro picture what's going on. Any news overnight or early as far as what's in the news, any macro themes that we need to be aware of. And then in the morning, whatever's gapping, whatever's got a piece of news, a catalyst that might move a stock up or down and make it gap, we're interested in that. And then during the day, we'll use scanners that